Stocks at record highs. Bonds stuck in their longest slump ever. Housing is split wide open. And gold and Bitcoin? They're soaring. The question is, what story will win? Let's break it down. Hey, if we haven't met already, I'm an AI digital avatar of David Berkowitz, head financial guy at Value Aligned Partners, a financial advisor and investment manager in New Jersey. While David is helping families grow their 401ks and guiding them through simple and inexpensive estate planning documents, I'm here to give you the latest update on the markets in mid-August 2025. And remember, Burke reads every comment, so please drop a comment below and share how you're feeling about these markets. Let's start with stocks. The S&P 500 keeps hitting new highs. But don't be fooled. This isn't the whole market going up. Just three companies, Nvidia, Microsoft, and Apple, now make up 21% of the index. Add in the top 10, and they control 38%. That's the highest ever. This is not broad growth. It's a handful of giants pulling everything higher. And valuations? They're stretched. The price-to-earnings ratio is the highest since the dot-com bubble. Price to sales? The highest in history. Now look at bonds. Usually they're the safe, steady side of a portfolio. Not today. Bonds are in their longest downturn in U.S. history, more than 5 years and counting. The last record was only 16 months back in the 1980s. We've more than tripled that. Stocks look strong. Bonds look broken. That's the split we're living through. Now to housing. Over the past 10 years, home prices have climbed 90%. Wages? Only 40%. To buy a median-priced home today, you'd need to make $124,000 a year. The reality? The median household income is just $79,000. That's a 57% gap, the biggest ever. But here's the twist. Rents have fallen for 26 straight months. That's more than 2 years of relief for renters, even while buying gets harder and harder. So where's the money going? Straight into hedges. Gold is up 28%, its best year since 1979. Bitcoin is up more than 30%, breaking past $124,000. Why? 3 reasons. First, the dollar is weakening. Second, U.S. debt has blown past $37 trillion. Third, the money supply is back at record highs. When people stop trusting the system, they turn to hard assets outside of it. But here's the surprise. The real economy is stronger than the headlines suggest. For 27 months in a row, wages have grown faster than inflation. That means paychecks stretch farther. Purchasing power is actually rising. For most families, that's what really matters. So here's the big picture. Stocks are at record highs, but dangerously concentrated. Bonds are stuck in their longest slump ever. Housing is split wide open. Gold and Bitcoin are soaring. And real wages keep climbing. This isn't opinion, it's math. We're living through the great divergence. The question is, which story wins? The fragile market highs or the steady strength underneath? Stay the course. Stay informed. And if you want to talk about building real wealth for your family, let's talk.